Are you worried about your bank deposits and Social Security benefits amidst today's economic instability? You're not alone. With everything from potential bank failures to inflation concerns, it's no surprise that many people are anxious about their financial future. In this video, we'll address those concerns head-on, shedding light on how economic uncertainty and potential bank failures could impact your monthly benefits, like Social Security, SSDI, SSI, and Veterans Assistance. We'll also discuss how FDIC insurance works to protect your deposits and give you the peace of mind you need. Stay tuned until the end, because we'll not only reassure you, but also provide actionable tips and important information to help you navigate these turbulent times. Welcome to Financial Area. If you're looking for insights on protecting your financial future, make sure to like and subscribe for more content. Let's dive into today's discussion. The current economic environment is marked by significant uncertainty, leaving many individuals feeling uneasy about their financial future. Inflation continues to rise, interest rates have increased, and the looming threat of a recession has many people on edge. This has created a ripple effect that impacts people who rely on fixed incomes, such as Social Security benefits. For those who depend on these payments for their daily living expenses, any disruption can cause a great deal of concern. The fear of potential financial instability can feel overwhelming, especially when the future seems uncertain. Amid these economic fluctuations, individuals receiving benefits like SSDI, SSI, and Veterans Assistance are asking whether their monthly payments could be at risk. The idea of missing a payment or experiencing delays is troubling for anyone who depends on these funds. With the situation evolving, many people are wondering if the banking system, which plays a crucial role in the disbursement of these benefits, will remain stable enough to continue delivering payments. Although the economic climate is uneasy, it's important to remember that while some level of risk exists, the banking system itself appears stable for the time being. This assurance should offer some peace of mind to those who are concerned about their ability to receive their Social Security benefits without interruption. The reality is that the financial system has experienced downturns before, but it has also proven resilient in times of crisis. While these periods of uncertainty certainly raise valid concerns, there's no immediate indication that payments to fixed income recipients will stop or be delayed in the near future. It's natural to worry, but there are safety mechanisms in place that continue to provide a sense of security in an otherwise volatile environment. The fear of potential bank failures is one of the most pressing concerns people have when it comes to the continuity of their monthly benefits. With high-profile collapses like Silicon Valley Bank, many are left wondering if their deposits are at risk, especially those who rely on fixed income payments like Social Security. While it's understandable to be concerned, it's important to recognize that bank failures, although unsettling, don't necessarily lead to widespread disruption of benefits. Historically, when banks fail, large institutions typically step in to acquire the struggling ones, often preventing the collapse from affecting consumers directly. This means that even if a bank were to fail, your Social Security benefits would likely still be processed without disruption, as larger banks or government institutions would take over the processing and distribution. While such incidents can certainly cause concern, it's important to note that in most cases, the larger financial institutions work quickly to protect their customers. For example, after a bank failure, government-backed programs such as the FDIC ensure that deposits are protected, and accounts are typically transferred smoothly to other institutions. This minimizes the impact on individuals who rely on these payments to cover essential living expenses. Furthermore, the likelihood of widespread bank failures significantly disrupting Social Security payments is low, as these payments are tied to a well-established system that doesn't hinge entirely on individual banks, but rather on broader government processes. Moreover, the federal government has a long history of stepping in to safeguard vital programs, especially during economic downturns. Even when banks face trouble, the continuation of Social Security payments remains a top priority. Whether the funds are being distributed by a large bank or through government systems, the safety and reliability of these payments are prioritized. The financial infrastructure that supports Social Security benefits is much more robust and insulated from individual bank failures than many people realize, which means that, while some fear is understandable, it's not likely that people will see disruptions in their payments due to such events. In the face of financial uncertainty, one of the key safety nets available to individuals concerned about their deposits is FDIC insurance. The Federal Deposit Insurance Corporation, FDIC, plays a vital role in protecting bank depositors by insuring deposits up to $250,000 per depositor per insured bank. This protection means that even in the event of a bank failure, the government will step in to ensure that depositors' funds are returned up to the insured limit. For those relying on monthly Social Security payments or other fixed income benefits, knowing that their deposits are covered by FDIC insurance can provide a great deal of reassurance. It's an added layer of security that ensures even if the worst were to happen with a bank, their savings and Social Security benefits remain safe. It's crucial to make sure that the bank where you hold your account is FDIC insured. While most large banks in the U.S. are FDIC insured, some smaller or non-traditional financial institutions may not be. Therefore, it's a good idea to check and confirm that your bank is covered under FDIC protection. This simple verification can help you avoid the risk of losing access to your funds in the unlikely event that a bank experiences financial trouble. If you're unsure, you can easily search the FDIC's website or contact your bank directly to confirm their coverage. In addition to FDIC insurance, another critical element in ensuring the safety of Social Security payments is knowing how your money is being managed. Direct deposit, which is the method most Social Security recipients use, provides a quick and secure way for individuals to receive their monthly payments directly into their bank accounts. This method eliminates the risk of lost or delayed checks and ensures that funds are available promptly, even during times of financial uncertainty. Since these payments are processed through government systems and deposited directly into accounts, the continuity of these payments is less vulnerable to disruptions caused by a bank's failure. To further secure your finances, consider diversifying your deposits. While FDIC insurance offers protection up to $250,000, some people may have more than that in a single account. If that's the case, it's a good idea to spread your funds across different accounts or banks to ensure that everything is covered. By doing this, you can maximize your protection and minimize the risk of losing any of your deposits if something were to happen to your bank. This simple step can go a long way in securing your financial future, especially when relying on fixed incomes like Social Security benefits. For many, the thought of losing access to their Social Security benefits is terrifying. However, understanding how FDIC insurance works and how to protect your deposits provides peace of mind, knowing that even in the worst-case scenario, your funds remain safe. Whether you are worried about a potential bank failure or simply want to make sure your money is secure, taking the time to understand these protections and taking action to safeguard your deposits can make all the difference in maintaining financial stability, regardless of the economic climate.